Okay, so we're around halfway through the US session on Thursday, the 31st of July. After the bell this evening, we have Apple and Amazon both reporting their earnings. Amazon typically goes straight after the bell. Apple tend to delay 20 to 30 minutes after the bell. So let's take a look at the charts of those two stocks. This is the weekly chart of Apple, and you got a 1, 2, and I would suggest the 3 was here in Apple. This was a cycle degree 3 with a 4 into the low here. Now, if you look at the structure of this wave 4, A, B, C, pullback, A, B, C, pullback. So I think this final fifth is a very, very large ending diagonal, and that what we've seen, if I just then zoom this out here and go to the this low here, which was that was the low coming off the January 23 low. And I think what we've got is a 1, 2, 3, 4, 5 into the high that we saw at the beginning of this year for an A wave of a final A, B, C and a fifth. Now, if you look, we got the fall or the drop into support where we got the block trades on the way up. That was an A, B, C down into the April low in common with a lot of the stocks and the market itself. But the move up has been very, very, very weak by comparison to its peer group and the market in general in Apple. And I think this move up is corrective. So if we take it down to a daily time frame and off the A wave, there's the A, B, C down for a W. Now this looks to me like A, B, C up, W, and then a triangle for the X wave to here, and then another A, B. I think it's got another little leg up to come to complete a correction. So providing this holds support here at 195.46, that's the key level that Apple needs to hold when earnings are released. If it drops initially, then I would look for another push up to a minimum of 220.29 and possibly 234.73 to 236.99 in Apple. If I add the cycles in, you can see that this cycle, it came out of the bottom here. There was your CRSI buy, momentum going positive, trender going positive, the Brexit going positive. There was all the indicators. And it followed the market to here and then just has gone sideways pretty much ever since. But it's suggesting that the pressure from cycles is still up just for a brief while longer. And then again, in common with many stocks in the market after that, we're expecting a much more prolonged decline into around October timeframe here. Where it is that? Yeah, mid-October. For I think it'll be the Y of B. So that will take the form of an A, B, C down to at least 164.70, possibly 145 to 148. So in the short term, I would look for a pop on earnings that then gets sold in Apple. And if I then just take this down to an hourly time frame, let's take these off so you can see the structure of the move. So there's the W up, X, A, B, and I'm looking for this C wave down in Apple. And if we just then zoom right in on that and look at the fibs. So the 1.0 extension here for the A to C relationship is at 206.79. Just below there, you've got the 50% retrace fib of the A wave up at 205.38. So that's the first support zone to watch on the earnings release. And just below that, you've got the 138.2 top down fib and the 618 bottom up fib, 202 to 203.5. I'd look for one of those zones to hold and then Apple to push up. The must hold level, as I said, 195.07 in Apple. Quick look at the relative rotation graphs. So if I just look at XLK relative to XLK on a daily basis, and you see Apple, it's here. So again, it's was improving, and it's pushed down back into lagging here, but it's very close to this central pivot. So it wouldn't take much to bring it back up, but I think it will have a short-lived period before it starts to fade again with Apple. So if we move on and look at Amazon, and while I've got the relative rotation graphs up here, let's then take XLY, which is Amazon, and let's look at it against, XLY itself, so that we're looking at the stocks in XLY relative to the ETF. And you see Amazon here, it's started to come back up into leading. It's moved down into weakening, and it's pushed back up here. So are we going to see a bit more continued strength, or is it going to drop down? It's less than convincing, I would say. I would have thought if this stock was on a tear, we'd be seeing this in Amazon. If I just zoom it out to a weekly, looks a little bit more encouraging on the weekly. It's come all the way from lagging through improving and into the leading sector. So Amazon looking a little bit more encouraging on a relative basis. Now let's come over and take a look at the stock, and let's go to the weekly chart. So again, excuse me, I think we are in the final throes of a cycle degree wave 3 in Amazon. And when it concludes, we're going to see something much bigger to the downside. So if I just take that out and look at it on the, hang on a sec, let's go back. For some reason the data's decided to play up. Give me a second. So this is the monthly chart of Amazon, and off the all-time low back at the IPO in the 90s, 1, 2, and you can see that we've not quite got to the 1618 fib yet. 359.80 would be the logical target for the 3, after which we should see a pullback towards 66, would you believe, before we get the 5th wave up in Amazon. Now, if I bring all of that then down to a daily time frame and we add the cycles in, you can see the daily cycles have already turned down in Amazon. And if we just zoom in on this, and again, it's suggesting that we're going to get a pullback into back into September timeframe in Amazon. Now, we've not got any sell signals. CRSI not on a sell, Mansfield not. The trend is starting to turn, but we've still got a consensus of 11 to the upside, albeit on very, very lackluster momentum. And look at this daily squeeze. That's been building since here. We've had price compression all the way up here with one little respite as we sort of zigzagged higher. What I would suggest is when this move completes off the 4, we're going to find ourselves back at 202 rapidly, likely as the A wave of the B wave correction that we're looking for overall. But again, if I come down the time frames in Amazon, and let's look at it on a 2-hour time frame. So I think off the 4, we've got an A, B, then an ABC 1, 2, ABC 3, 4 into yesterday's low. And then in common with things like the index, I think that the move up that we've seen out of that low, the very, very powerful move up here was an A wave. The pullback that we've seen this afternoon was the B wave. And now we're in the C wave up. And if we push up this evening beyond 238.75, the levels to watch, 240, 242, but I think much, much more likely this 245 area with a possibility we extend all the way up to 250. So that's what I'm looking for in Amazon this evening on the earnings. Ideally, it holds today's pullback low at 231.51. The must-hold level is at 229.45. If we can take out the high at 238.79, then this is the target region above in Amazon. But I do think it will be short-lived. I think that the cycles are telling us across the board now that we are very close to a larger degree pullback in indices and a lot of the major stocks within them.